Hi, hope you're all doing well. Today we've got 4 stock updates for you guys. Well, technically there's a few more than 4 stocks, but I'm going to tie a few of them together towards the end. There's like some Sheen and some Dark Trace tied together, and you're like, how do them two tie together? I'll show you when we get there. So technically there's more than 4 stock updates, but I thought I'd just call it 4 stock updates to make it easier. And I know some of you guys like this stock where I kind of cover a couple of stocks in a couple of minutes and kind of give some updated news about it. Starting off with this one, S4 Capital. I mean, obviously, reported earnings yesterday. It's funny, I made an S4 Capital video yesterday, and it's the people that crawl out of the woodwork and come back out of the mum's basement and start typing comments going, another bad stock pick. It's like, where have you all been for like the last 18 months? You've been quiet. When we've been posting DraftKings video and Hims and Hers video, there's been no comments about it. And then as soon as we talk about S4 Capital, it's back in the comment section. It's absolutely crazy. Honestly, it's why I hate making videos on these sort of stocks, because some people just crawl out of the woodwork that are being disappeared for like the last 2 years after this bull market, and it makes me laugh. It's crazy. It's probably the reason why I'm thinking of packing and doing YouTube at the end of the year, at the end of the year anyway, because it's just, I think people expect you to get 10 out of 10 stocks right all the time. It's crazy anyway. But yeah, S4 Capital having a good day today. The stock is up 17%. Not really a reason why, unless there's some leak that we don't really know about at the moment going out there. But yeah, there's not really that much news that I can see. Like I said on yesterday's video, I think it just belongs to the day traders at the moment. And I mean, it is pretty impressive when you look at the share price action. The earnings come out, the stock goes down, nearly recovers all of the dip yesterday, and now is actually higher than where it was when it reported earnings. I mean, like I said in yesterday's video, I think financially it's just got to the point of view now where it seems like it's the bottom financially, and maybe there's a few bottom pickers kind of coming in, but I think a lot of it is the day traders, and then shorts are getting squeezed as well a little bit at the moment. So not really anything to talk about, but I just thought it's funny that the stock was down yesterday, and I got about a million questions why the stock was down yesterday, and then today I've got no questions why the stock is up. So it shows you the emotional side of investing there. JD Sports up, having a good day today, nearly up 10%, and yeah, glad I've been buying the dip on this one. I wouldn't mind buying a few more shares. If it could drop maybe like 10% more, that would be ideal, but obviously it's riding up the positive news of the update, and I've got to say, like, it was a cracking update. Once again, I looked at the numbers and I went, these are good numbers in this time period to be doing these numbers. They're so impressive. You look at some people like Nike, for example. You look at Lululemon that reported their numbers as well, and how much they're struggling. Foot Locker, how much they're struggling. You look at those numbers of those businesses that are struggling, and JD Sports is like, yeah, we've seen a tough environment, but you look at the numbers, and Nike, wish they could do these sort of numbers, and yeah, really impressive. And the crazy thing is, you look at this, stock at 8 times forward earnings. It's, what's Nike at the moment? It's still like 25 times forward earnings or whatever it is, 24 times forward earnings. It's like, yeah, fair enough. Like, you've got the brand appeal there. Like, it's, at the end of the day, they own the brand, and these are premium owning that. But come on, like, it's not worth that much of a difference. I've just got to apologise there. I realised I had JD that commented JD Sports up on the forward PE. It's actually 9 instead of 8, so a big difference there. So yeah, it's just, it's great. I don't know how a stock is so valuation to numbers disconnected. It's the UK market, I guess. It's frustrating that it's this low, because it shouldn't be. So yeah, it was a steal only a few weeks ago. DraftKings, I mean, yesterday was a tough day yesterday. My account was down like 2% yesterday as the market was up. But hey, when your biggest stock is, down nearly, 5% or whatever it was, 6%, you are going to feel it. And just like how the stock is up 34% year to date, obviously my account's been on fire this year because of this guy. So you got to take the positive days with negative days, and maybe that it does say that I should balance out that position that much if this stock moving this much is causing that much volatility in my portfolio. But yeah, the stock was down yesterday. There was a couple of news articles out talking about crackdown on a lot of these these sports betting businesses at the moment, if they're going to limit the bets or how the bets are placed and what bets are being put on. It's just talk at the end of the day. Nothing will really come of it. It's an election year. They're trying to make all these promises, and nothing really will come of it. And if it does, it won't be anything that really changes the business fundamentally. The reason why it's dropping, and it was frustrating actually, because the DraftKings itself was actually up in pre-market, and it looked like DraftKings was actually going to break the $50 mark, which would have been really nice. Unfortunately, then it went down after this kind of came out. But yeah, it's nothing serious, and the reason why the stock went down so much is because we're a bit of a premium valuation now. Everyone wants to own DraftKings. It's a loved stock now, which is crazy to say from 2 years ago. And you got these kind of price targets where analysts were like putting it down to $10 a year ago, 2 years ago, and now they're raising it from $54 up to $58 and putting it on the conviction list. It's everyone. It's a premium stock now. Everyone wants to own it. It's not the same stock where we were at like 2 years ago when nobody wanted to own it. It's a premium stock now. So when you're at a premium stock, if there's any kind of like negative news out there, it has the ability to kind of knock it down this much. It's just the difference that you got to realize now that we're a premium stock, and any sort of negative news will knock the stock down that much. I mean, realistically, there was a bigger news story out there the other day, which was actually New Jersey proposing doubling the tax rate for online gambling to 30%. This would affect DraftKings more. This is like the background story that you want to be watching, and I guess this is always the kind of thing that makes me like cautious on DraftKings, is that a lot of states probably will put the taxes up at some point, which is annoying because it will hurt the profitability. But also from a point of view is like they're really trying to cash in and tax these companies. But what also surprised me as well is like, DraftKings has such a good market share of like these states, and between them and Flutter, I think them and Flutter, own, 80-90% in most states. And DraftKings, I don't know if you've ever seen it, but the CEO of Flutter and DraftKings CEO, Jason Robbins, are actually quite good mates. I think they're quite pal with each other. So, if the thing is they kind of have the power. So what would be funny is that this is probably the biggest threat, that they go, oh, we're going to double the tax rate. But then DraftKings and Flutter or FanDuel, they kind of go, actually, you know what? If you do that, we're actually going to pull out. So you lose all of our tax money. They could have kind of forced this a little bit to kind of be like, hey, you watch what you're doing with these taxes. But I guess this is the big battle that potentially could go in the background going in futures. These sort of things that they're on about will never come in, because at the moment these states are just realising like the amount of tax they're making at the moment from these sports betting companies, and they're not restricting that anytime soon, trust me. So yeah, it's just one of those drops on a premium stock at the moment, because any sort of news will spook it like that. So you've just got to accept now DraftKings isn't a dog stock anymore, it's a premium company, so you are going to have these sort of things that do affect it at some point. MoneySuperMarket, I mean, this has been frustrating for me, because I've owned this stock for like a year, and I spent like the whole kind of year in the stock kind of, at this sort of level, and it's been flat, and I've been like, I want it to go lower, but I don't think it's going low, so I'm just going to keep nibbling, and eventually I've kind of got this position size built up, and then within this last month, boom, it's then fallen another 10% to like the levels I want to buy, and I've been like, now it drops. So this has been frustrating with MoneySuperMarket, which I'm not going to complain too much about it, but it's like now it drops when I've started to build up that bigger position. It's yeah, but 5% dividend yield, 5.5% dividend yield, 16 times earnings now for this business. The only thing I can find out why the stock is dropping is because it went ex-dividend today, and I think a few people might have qualified for dividend and then sold it out. But I can't see why it's dropping in it. I mean, to get this back at 16 times earnings, 5.5% dividend yield, I mean, you only need another 4% a year from the share price to kind of match the S&P 500 returns here. It's a lovely dividend here. And the thing is, with MoneySuperMarket now is that it's, like I said, it's fallen down to 16.17 times earnings. I mean, the lowest it has been in the last 5 years, it's somewhere, so the average is actually at 18 times earnings, so it's actually fallen below its average here. But if you actually look at the lowest it's ever been, the 5-year low was in December 2022, obviously during like the Liz Truss period of time, and that was 16.4 times. So this stock has now fallen below its average PE and is now below its last 5-year low during that time of like Liz Truss, if you remember it. So yeah, it's an interesting opportunity to say the least. And the last thing we're going to finish off with is Sheen and Darktrace and how they all kind of link together. So I don't know if you saw this the other day, but there's more talk about the London Stock Exchange and companies avoiding it. We talked about this before. There's a lot of companies avoiding the London Stock Exchange at the moment. And if you actually look at the difference between companies listing on it this year compared to last year, there's a big gap at the moment, and companies are avoiding it. And it's no surprise. I've been saying this for a long time. You look at MoneySuperMarket. Imagine if MoneySuperMarket was on the US stock market. it won't be trading at 16 times earnings with a 5% dividend yield with the numbers that they're pulling off at the moment. So yeah, it's insane. But what then surprised me even more is that, I don't know if you saw this, but Shein are currently considering making an IPO in London. Jeremy Hunt apparently went to go talk to them about listing into the London Stock Exchange, which I don't think they will do. Surely they've got a list on the US market, because there's no way that they're going to get this valuation on the UK market to the US market. It's suicide if they do that. So I'll be really surprised if this happens. But what surprised me as well is like Jeremy Hunt trying to persuade Shein to list on the UK markets. Like, we've seen the issues with like the company with the alleged labour kind of situation at the moment and the forced labour, and we've seen the talk about the customer data and the concerns about the data being in Chinese companies' hands, and then they're trying to persuade Shein to come onto the UK markets. And it's like, any sort of issues that we've seen this with, like our own companies like Boohoo, you've absolutely slated them for years, and yet you're willing to like let this one that has big labour issues to come onto the US markets, and then you've had all this political spat with the data situation, and then you want him to come on the UK markets. It's crazy. So I'll be really surprised if they come to the UK markets, and if they do, I think it's business suicide. I think that they should be looking at the US markets, because the valuations that they trade at, and this goes on here, like saying like the discounted value that they trade at is crazy compared to like the similar businesses. You know, Darktrace, this company has done really well for us this year. It's up 25% this year, and since I started talking about the stock is up over 78%, and it's done really well. But you look at Darktrace, this is one of the best UK tech companies that we've had on the market for a long time, and yet the market has just destroyed it in the last kind of few years. It's come with allowed fake accusations about the financials. Nobody's owning it, and even though now there's finally some buyers coming in, that the financials have been absolutely amazing, it's still like 32 times earnings. And you look at Palo Alto Networks, which is kind of a similar company in the US, it's 44 times earnings. Like it's trading nearly a 50% premium more than Darktrace, even though Darktrace is financially performing a lot better than Palo Alto Networks. It's crazy. Why companies no wonder companies are avoiding the UK markets when you've got a company like Darktrace, one of the best UK tech companies we've had for a long time, and it trades at a 50% disconnected value to a very similar company in the US. And when you look at the financials, Darktrace is growing 27%. Palo Alto Networks is growing 19%. Financially, Darktrace is growing 8% faster than a similar company in the US, and yet it's at a 50% disconnect. I mean, this is why, for me, I look at companies like Darktrace and I'm like, get off the UK markets, get onto the US markets, because the valuation you'll trade at is so much better. And it's crazy. Like, there's no wonder these companies are avoiding these UK markets when you look at the discount and that they go to, and the punishment they go through. This should be worshipped as a UK stock, and it's not, which is it's just frustrating to see. So I look at someone like Shein and like, I'm surprised that they're looking to list on the London Stock Exchange, but I'm also surprised that the UK government, after the stick they've given other UK businesses, and then trying to get them to come onto the UK market. I think Darktrace itself, when Darktrace were looking for the IPO and they were deciding between a US or a UK listing, I think they eventually were persuaded, with Boris Johnson at the time, to come to the UK markets. What an awful decision that was. So yeah, it's some strange things going out there anyway, guys. So anyway, hope you enjoyed the video, guys, and I'll see you on Friday.